Ladies and gentlemen, good morning, and welcome to the Scoda Tubes Limited Q4 FY25 earnings conference call hosted by Monarch Networth Capital Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectation of the company as on date of this call. These statements are not the guarantee of future performance of the company, and it may involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then 0 on your touchtone telephone. Please note that this conference is being recorded. I would now hand the conference to Mr. Sahil Sanghvi from Monarch Networth Capital Limited for opening remarks. Thank you, and over to you, Sahil.
Thank you, Ryan. Good morning to everyone. On behalf of Monarch Networth Capital, we welcome you all to the 4Q and FY25 earnings call of Scoda Tubes Limited. We are delighted to host the management of Scoda Tubes, and from their side, we have Mr. Samarth Patel, Chairman and Executive Director, and Mr. Ravi Patel, who is the Chief Financial Officer. So, without taking much time, I'll hand over the call to the management for the opening remarks. Thank you, and over to the management.
Hi everyone. Good morning everyone, and thank you for joining us for the maiden earnings call of Scoda Tubes Limited. I hope all of you have had a chance to go through our financial results and investor presentation, which are available on our website and the stock exchanges. Joining me today on this call are Mr. Jagrut Patel, Managing Director, Mr. Saurabh Patel, Non-Executive Director, Mr. Ravi Patel, Chief Financial Officer, and Mr. Vipul Patel, President of the company, Mr. Rutul Shah and Mr. Raj Shah from Capital Bridge Advisors, our Investor Relations Consultant. Before we begin with the key highlights of FY25, I would like to briefly introduce the company incorporated in 2008. Scoda Tubes Limited is a fully integrated stainless steel tubes and pipes manufacturer catering to customers across multiple industries and geographies. Our product portfolio includes stainless steel seamless and welded pipes, stainless steel seamless and welded tubes, stainless steel seamless and welded U-tubes, and stainless steel instrumentation tubes. Our sole manufacturing facility spreads across 21,199 square meters plot. It's strategically located just 360 kilometers from Mundra Port and 23 kilometers from Inland Container Depot. This proximity enhances our connectivity to international markets and aids us in optimizing our logistic cost. We supply to both private and government clients across sectors such as oil and gas, chemicals, fertilizers, energy, automotive, pharmaceuticals, and transportation. Our products are exported to 14 countries across Europe, America, and the Middle East, Africa, and Australia. The diversification across clients and geographies hedge our business operations against any sector or geography specific risk. Let me now walk you through the key highlights for FY25. We are happy to share that we delivered strong performance in FY25 with consolidated revenue, EBITDA, and net earnings growing by 21%, 33%, and 73% respectively. FY25 has been a healthy year for Scoda Tubes Limited in terms of performance. The strong performance was largely driven by strong domestic and global demand and price stabilization. Starting with capacity expansion and capital expenditure, as we enter FY26, the management is focused on expanding the company's existing capacity across both seamless and welded product segments. We plan to increase our seamless production capacity from the current 10,068 metric tons per annum to 20,068 metric tons per annum. Our welded production capacity is expected to rise significantly from existing 1,020 metric tons per annum to 13,150 metric tons per annum. Following our expansion, our finished goods capacity will increase to 33,128 metric tons per annum from 11,088 metric tons per annum. This excludes our mother hollow capacity of 20,000 metric tons per annum, which was set in 2022 to aid captive consumption and enable vertical backward integration of our operations. We intend to invest rupees 100 crore in capital expenditure to support this growth. Out of this, 55 crore will be allocated towards expanding our seamless production capacity and 45 crores towards increasing our welded production capacity. In addition to the planned expansion, the management plans to focus on increasing international customer base and customer diversification, expanding our welded tubes and pipe business, and launching new products in welded segment, increasing operational efficiency with enhanced value addition through backward integration. Moving on to IPO proceeds utilization. The company had earmarked rupees 105 crores towards expanding production capacity of seamless and welded tubes and pipes, and rupees 110 crores for working capital requirement. We continue to deploy this process in a capital efficient manner, thereby creating value for our all stakeholders. I will now hand over the call to Ravi Bhai to walk you through the financial metrics.
Good morning, everyone. Coming to financial metrics, revenue from operations grew by 21% year-on-year to rupees 484.9 crores in FY25. In Q4 FY25, the revenue was broadly flat at rupees 123.7 crores. Revenue breakup across segments for FY25 is as follows: seamless 94.6%, welded 0.6%, and remaining others is 4.8%. For Q4 FY25, revenue breakup across segments is as follows: seamless 93.2%, welded 0.8%, and the remaining is 6%. Export revenue of total stood at 27% and 24% in FY25 and Q4 FY25 respectively. Revenue breakup across geographies for FY25 is as follows: India 73%, Europe 22%, Americas 4%, MENA and Oceanic 1%. EBITDA grew by 33% year-on-year to rupees 78.1 crores in FY25. EBITDA margins stood at 16.1% versus 14.7% last year, up 139 basis points on a year-on-year basis. In Q4 FY25, EBITDA grew by 6% year-on-year to rupees 17.4 crores. EBITDA margins stood at 14.1% versus 13.2% last year, up 91 basis points on a year-on-year basis. PAT grew by 73% year-on-year to rupees 31.7 crores in FY25. PAT margins stood at 6.5% versus 4.6% last year, up 197 basis points on a year-on-year basis. In Q4 FY25, PAT grew by 130% year-on-year to rupees 6.8 crores. PAT margins stood at 5.5% versus 2.4% last year, up 316 basis points on a year-on-year basis. In FY25, the company had incurred rupees 39.9 crores in capex. Net block as on March 25 stood at rupees 80.9 crores, and capital work in progress as on March 25 stood at rupees 22.5 crores. In closing, we are optimistic about the road ahead as we enter the next chapter of Scoda Tubes Limited's growth journey. With prudent investments in capacity expansion and an unwavering focus on operational excellence, we are confident in our ability to drive sustainable and profitable growth for the company. We will now open the floor for Q&A.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Vineet Gala from Xylem PMS. Please go ahead.
Hi, thanks for the opportunity. So to start with, can you help me with the production volumes for seamless and mother hollow, both for FY25 and Q4? Hello?
So, as per competitive reasons, we can't declare volumes.
Okay. But, sir, broadly, I mean, if you could help us with the mix. So we have the 9-month numbers in the DRHP.
Okay.
So I just wanted to understand, so like our gross margins have come down sharply from, say, like 35% to by around 9 odd percent. So if you could articulate more on this, like how should we see gross margins for coming quarters? And, you know, our sales largely should be very seamless heavy. So how should we see the gross margins?
So, gross margins was primarily due to a higher sale of mother hollows in the last quarter. So, that was the reason the gross margin was decreased, or as well as EBITDA margin was also decreased.
But there was no drop in volumes during Q4. The main reason was the sales of mother hollow was largely focused in Q4.
Correct. So like, sir, precisely, I mean, if I see the 9-month data, I mean, we've done around 8,000 tons of seamless sales in 9 months itself, and our nameplate capacity is around 10,000 odd tons. So, and we've maintained the top line broadly. So it is. So I just wanted to understand the mix of mother hollow sales in the Q4 sales.
So broadly, just to give you the guidance, first of all, because of the competitive reason, we'll not be disclosing the volumes. But just for the guidance reason, as you already mentioned, that we were on the top line, we have already utilized 8,000 tons of seamless capacities in 9 months. So for the last quarter, the sales was majorly focused on mother hollows until and unless the new setup, which we are going to do for seamless, which we have already started from the proceeds of pre-IPO, which we did in September. That is the reason that largely we focused on sales of mother hollow, because already the capacities for seamless were a little bit on the tighter side.
Fair enough, sir. Fair enough. So I mean, sir, Q1 onwards, what is the nameplate capacity that we have for seamless, and what kind of production volumes? So if you could give us some guidance on the production volumes for our next 4 quarters, and also for next 2-3 years, in the context, like we have got our pre-IPO money in last September, so there would be a couple of lines added. So what kind of volumes can we expect in next 3 to 4 quarters, and also for next 2-3 years?
Yeah, so we aim to grow at 2.5 to 3x the industry growth in terms of volumes. That said, our FY26 growth will be back-ended as an additional capacity comes on stream only in H2 financial year 26. That is only in H2. Given the competitive landscape, we will be unable to share specific volume growth guidance at this stage and at this moment.
Fair enough, sir. Fair enough. That's it from my side, sir. Thank you.
Thank you.
Thank you. The next question comes from the line of Rishi Kothari from Pi Square Investments. Please go ahead.
Yeah, hello. Thank you so much for the opportunity and congratulations on good set of numbers. I just wanted to know a quick update what exactly has been trend for raw materials for past 1 year or so, and what exactly trend we are looking at for next 1 to 2 years for our raw material cost.
So, if we talk about the raw material prices, I think from past year it has remained much at the constant levels. So, prices have declined about 5 to 10%, but that is over the past 24 months. If we just talk about last year, then largely it has been stable. So we do not foresee significant fluctuations and expect raw material prices to remain stable at current levels, as it is trading at the base minimum level, which we can call.
Okay, got it. And in terms of the new CapEx that you are looking at, what exactly is the outlook for that particular CapEx?
Can you repeat the question, sir? We are not able to hear you properly.
Yeah, I'm audible properly now. Hello.
Yeah. Yes.
Yeah, I'm saying the new capex that we have done for the new capacity addition. What exactly outlook we are looking at from the industry terms?
Sir, I think line is not clear. We are not able to hear properly.
I'll again join back
regarding the capex. Yeah.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and one. We take the next question from the line of Sahil Sanghvi from Monarch Network Capital Limited. Please go ahead.
Yeah, good morning, and first of all, congratulations for a very good set of FY25 numbers, the way we have grown and the way the profitability has increased. The first question that I would want to understand is, where do we classify the revenue for hollow tubes in the presentation? I mean, and if you can just help me with the revenue number for hollow tubes in FY25.
So specifically, we don't have the numbers for mother rollos for FY25. If you can see in the presentation, we have some part which is called others, which includes the sales of scrap. But whatever you consider it as a seamless, it includes both seamless pipes as finished goods and mother rollos. Because basically mother rollos are part of seamless product itself. So we haven't described it on a differentiative categorize or that kind of thing.
Sure. Secondly, if you can help us understand how will the sales of hollow tube move ahead, as in when do we expect this to be totally eliminated, as in totally converted into finished products, by what time period?
So we can assume that by Q1 next financial year, we'll be seeing that all of the mother rollos will be used only for captive production. In H2, we are setting up the mill for seamless production, but what we expect is 100% utilization of the mother rollos can be done in next financial year.
Okay. Secondly, if you can help us understand on the approval side also, and on the product side, which are the few new products that we're trying to capture in the next 2-3 years? What kind of approvals are we trying to get? And just want to understand the growth trajectory for the next 2-3 years.
So if we talk about the approvals and the sectors which we expect to grow or which we target to enter or explore, is basically on the green energy side, even in the energy and power sector as well. And some of the approvals which are already under process, which includes the marine sector, that is shipbuilding industry. Some of the products can be used in what we target is in the defense sector as well. So these are the new sectors in upcoming 2 to 3 years where our sales team and the approval team would be working on.
Okay. This is good enough. I'll come back in the queue. Thank you so much, and all the best.
Thank you.
Thank you. We take the next question from the line of Smith Shah from Monarch Network Capital Limited. Please go ahead.
Hello, am I audible?
Yes.
Yes, so congratulations on the numbers. I have a couple of questions. The first question is about the market share. What is Scoda's market share in the seamless segment?
So if you talk about only on the seamless side, then it was around between 3 to 4% for the last financial year.
Okay. And what will be the focus area in terms of growth? Will it be new product addition, new geographies, and what would be its impact on the margins?
So product portfolio will remain the same. What we'll be focusing in the addition of new product, that is welded pipes, which we are bringing in after the IPO proceeds as a part of new capex. And including those products, that is welded pipes, will also be focusing on the new geographies. obviously, where we'll be focusing on, on sales of overseas sales, where we can reach at the optimum, where we can be a part of the market share on the global basis as well.
Okay, that's great. Sir, and just last question, continuing on the previous participant. Just want to know what existing approvals do we have in those sectors that you mentioned, or are we that is in pipeline?
Some of the approvals we are in the pipeline. For example, which I told you, green energy, power sector, energy sector, we are into pipeline.
Okay, got it. Thank you for taking my questions.
Thank you.
Thank you. The next question comes from the line of Prerak Shah from Shah Family Office. Please go ahead.
Congratulations for the great set of numbers. Two questions from my end. First, I see.
Prerak, I would request to use your handset.
Hello. I'm audible now, better?
Hello. Not very clear.
Hello.
Yes.
Yeah. What was the reason for a sharp collapse in the other expense?
Yeah. So the decline in other expense was due to lower consumable cost this quarter. As we reach a certain scale, the incremental cost of consumable decreases, enabling operational efficiency as operating leverage kicks in. So basically, whenever we do a new capex, we buy the tools and the dies and the materials for the machine at that time. So basically, at that time part of the year or that specific quarter, the consumable cost is higher. But we are already into production once, so that incremental cost of consumables decrease.
Okay. Thank you, sir.
Thank you. The next question comes from the line of Ashutosh Nimani from JM Financial Family Office. Please go ahead.
Yeah. Thanks for the opportunity. My question is regarding the welded pipes. In a prospectus, if we see, the production has been consistently declining from 463 megatons to 39 megatons by FY24, and 9 months is 86. So, wanted to understand regarding that.
Yes, sure. So, first of all, I would like to clarify that the product which we have currently in welded, they are not pipes, they are welded tubes. Basically, tubes, the demand of welded tubes is very much lower, since we have seen the shift since past 3 to 5 years, that the demand of welded tubes has been decreasing, and people and the customers and the end user sectors are shifting to seamless tubes. So currently we don't have the capacity for welded pipes. What we have is welded tubes. So that is the only reason you are seeing the decline in the utilization of the welded capacity. But the setup which we are doing from the IPO process, the new capex we are bringing in, that is specifically for welded pipes. We are not increasing the capacity for welded tubes. And welded pipes are more on the commercial side, which comes in a package with the seamless pipes. Take it any EPC contractor or an end user or any kind of sector who wants to do a new capex, they buy both seamless as well as welded pipes. But welded tubes, we have seen the decline in the demand because of its life expectancy. Tubes are used in very critical applications, such as heat exchanger, boilers, LPHP, heaters or coolers. Basically, where temperature and pressure control are very important aspects. So in those kind of environment, what end users and the customers and on the global level, what they have seen is they want to shift to more reliable products with a longer life expectancy. That is seamless tubes. And that is the reason we have seen the decline in welded utilization.
Understood. Thanks a lot, sir.
Thank you.
Thank you. We take the next question from the line of Keshav from Vita AMC. Please go ahead.
Thank you for the opportunity. I wanted to take a moment and appreciate the level of detail in the presentation, and both the way the PPT and the way the management has conducted this call has been excellent. Like very clarity and effort put into PPT is a really needed appreciation. So I wanted to thank for that. Now coming to questions, I have a couple of questions. Starting with, you mentioned that we have a business in around 4 countries. We have a presence in 14 countries.
14.
So, the demand for assist tubes and pipes are growing globally. So how do you plan to penetrate further in the export market, since we have only 28%, if I'm not wrong, the revenue from export market? And which geographies you prioritize for next few years? Yeah.
So if we talk about the geographies, once we have the capacity for both seamless and welded, where we are able to utilize at optimum level, what we are seeing is, you can assume that our management and the team targets that we wanted to... Sorry, just a minute. Yeah. So, moving forward in the future, what we target is obviously that we'll want to push our sales more towards on the export side, because we get a smaller in a phase, but a volumetric section, volumetric geography, where we are able to make little bit more in terms of realization. So, what we focus is Europe has always been a strong market for us. While we won't comment on macroeconomic conditions of specific region, we do plan to establish our own offices in Europe to manage on-ground logistics, which are currently outsourced to local agents. Our broader goal is to expand export presence across sectors and geographies. And even America is a very good market for welded products. So once we are at the optimum level where we are able to supply both seamless and welded in a package, then we'll have more exposure to America in terms of percentage, in terms of the the involvement of the sales across the geographies.
Fair enough. Fair enough. So the last question I have is regarding this Q4 FY24 revenue. We see a dip, a very marginal dip, despite the full year growth. So I wanted to know about, is it because of taxation? And if you could share the tax rate which have been followed for this.
So, as I talked earlier, the revenue decline was primarily due to a higher sale of mother rollos this quarter. That was the reason of the drop in revenue as well as growth as well as EBITDA. Coming to your next question about the tax expenses. So, during the year, the company opted to exercise the option under Section 115BAA of the Income Tax Act 1961, shifting from the old regime to the new regime, reducing the tax rate from 29.8% to 25%. So, going forward, the applicable tax rate will be 25%.
Understood. Thanks. Thank you very much, sir, and we expect you to continue the same format of presentation. It was a very well presented PPT. Thanks, sir. Thank you.
Sure, sir. Thank you.
Thank you. The next question comes from the line of Gaurav Nigam from Tunga Investments. Please go ahead.
Yeah, thank you, sir, for taking my question. Sir, first question, in answer to our earlier participant, you mentioned about 2.5 to 3x of the underlying industry growth.
Yes.
Just wondering, what is the underlying baseline industry growth that you are assuming, and which industry growth you are talking about? Like stainless steel, seamless growth, like what exactly?
Yeah. So the industry growth which we are talking about is on the two sides. That is the demands on the stainless steel pipes and tubes, which includes both seamless as well as welded. So if you had gone through the presentation, we have a slide regarding the demands within India. That is in FY24, it was around 322,000, which is expected to grow by 6 to 8% by FY29, that is in the next 5 years of phase. Basically, we are talking about that kind of growth in the industry.
Understood. Got it. And this 2.5 to 3x, is that the guidance for FY26 also, or I mean, is there a different way of looking at it?
So this kind of guidance, you can tell that you can assume that going forward until and unless we reach at the optimum utilization of both seamless as well as welded production.
Okay, so this is not for FY26, I mean, just to be clear.
Not specifically, yes.
Got it. And sir, any guidance on the margins for FY26?
Margins are expected to remain in the range around 15 to 16%. Actually, we did the capex recently only. In H2, the operations will be there for seamless finished products. Broadly, we can assume 15 to 16% margins, as well as even the welded comes online, it will remain the same.
Seamless products typically has 16 to 18% margins, while welded delivers 12 to 13%. Resulting in a blended margin of profile of between 15 to 16%, which is highestly achievable.
Got it. Sir, in our calculation, just to clarify, are we assuming similar steel prices going forward, or what is the outlook on the underlying raw material?
Assuming, as I mentioned in an earlier answer, assuming the prices of the raw material remain same, which is on the baseline, you can say the nickel is trading around $16,000. Between 16 to 17,000, fairly this will remain same.
Understood, sir. Thank you for answering my question.
Thank you. The next question comes from the line of Gaurav Agarwal from 91 Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. I'm sorry I joined a bit late. So if I repeat any questions, sir, please ignore and I'll go through the transcript. Sir, have you disclosed your volume data for the full year, FY25? How much have you sold?
No, sir. For the quarter, we haven't done it because of the competitive reasons.
Okay. But sir, let's say in seamless, for the full year, can you help us what was the utilization for the full year, not for Q4? For the full year, I am asking, FY25.
So broadly, as you may have seen in the document in the RHP, that for the 9 months it was around 8,000 tons of utilization out of 10,000 in seamless. So going forward, the maximum what we were able to achieve historically was almost 100% capacity.
Okay. And in welded, sir, I think it was a low utilization in FY24. I guess it has been stuck in FY25.
Yes, it has been declining since past 3 years. So I have already answered about this. It was a very in detail explanation. So
I'll go through it.
Yes. Perfect.
Sir, just to understand a bit more about your business on the seamless pipe side, this is the same product which Ratnamani also makes, right? Which is a leader in this space.
Yes, very true.
Okay. And sir, coming to the growth side, now that we are expanding our capacity in a very big way, so most of the incremental capacity you plan to utilize for your export market or for the domestic market?
It has to be for both, sir. Obviously, the focus will be on balancing both the markets and equalizing our share in both markets.
Okay. But sir, if I may ask, what is our value proposition as compared to the largest player, on the domestic market? If you could help us understand where is the gap which we are trying to fill and the incremental capacity which we are putting up, how do we plan to, utilize it in a faster way?
So as you may have seen in the presentation, there's a slide about the demand in Indian market. In FY24, it was around 322,000, which includes both seamless as well as welded. We don't have the exact figures from the industry report for seamless as well as welded. But if you can just do the research by yourself, there is a shortfall in the demand of seamless pipes and tubes within India as well as on the global side. So we don't see it as a challenge somewhere after putting up and setting up this kind of capacities. Still we see that the demand will grow and there will be a shortfall continuing on next coming 5 to 10 years. Until and unless
the reason, sir, why I am asking is because Ratnamani FY25 results, I'm not sure how much was it because of the price decline, but the growth was hardly 2-3%, on the full year basis. So that is why I was asking,
If you focus on the numbers of Ratnamani, they have a product mix more than stainless steel seamless pipes and tubes. So hardly their sales the revenue and the sales of seamless comes around between 30 to 35% from stainless steel seamless pipes. Rest all is welded as well as carbon steel pipes. They are also involved in producing nickel alloy, that is super alloy grade, that is the expensive side and the expensive material from the stainless steel family, that is Inconel, Monel, cupro alloy, nickel alloy, and those kind of grades. So they have a specific set of products which is from the stainless steel family, but on the higher side. So I think that kind of comparison from the total point of view of Ratnamani will little be difficult with Scoda.
Understood. So any other competitor in the liquid space you guys can refer to, whom we should track to understand the industry dynamics better?
We'd like to give no kind of comments on that part, sir.
Okay, thank you.
Thank you.
Thank you. We take the next question from the line of Samir from Vama International. Please go ahead.
Yeah, just wanted to understand, in earlier, I think DHRP or something, the seamless pipe sales of FY24 were 313 crores, whereas in the PPT it is 371 crores. Is there a change or something which has happened?
Just a minute. Sure.
Yes.
So there was a difference of audited versus unaudited numbers.
Okay, so after audited numbers, it becomes 371 for last year, correct?
Yes. Correct. Yes. Correct.
And full year sales was 6862 tons. Does that remain the same or that changes?
So you're talking about the volume?
FY24. Volume, yes. Volume for seamless pipe.
Which we have disclosed in the DRSP, right? Yeah, that remains the same.
Yes, that remains the same. Okay, so just the amount changes over here.
Yes.
Okay. Yeah, that's it. There is no other question. Thank you.
Thank you.
Thank you. The next question comes from the line of Rahil Patel from Caterpillar Investment. Please go ahead.
Yes, sir. Congratulations on a very successful listing and great set of numbers. Two questions from my end. So there are a lot of new players like manufacturers entering with hot extrusion plant. Is there enough demand, and which are the main industries and companies which are issuing large tenders and orders?
So we'll not be disclosing the name of the customers, but we can give you a brief about the sectors. Demand side, I have already discussed on the call with two other people. But for example, which you said that MAN is coming up with a new hot extrusion plant. So as I mentioned earlier, there is still a shortfall in the demand against the production capacities in India and even on the global level. On the global level and within India is because even now all of the countries all over the world are going anti-China. For example, in Europe, they have imposed the anti-dumping duty since 2010. Even in America, Chinese goods had the import duty, which was around more than 70% on the Chinese goods. So where the China is not able to supply, there the doors for India has already opened. And that is the reason India has now started setting up the backward integration mill, which earlier, 5-7 years ago, was not that much in the scope. Very few companies used to have the hot extrusion or the hot piercing mill, right? Another thing is, even if we talk about the end users and the sectors, they are also somewhere going anti-China. For example, there are a lot of companies across Middle East, there are a lot of refineries across the European countries, a lot of refineries across America, where earlier Chinese goods used to be supplied, but now they have also banned the Chinese goods where somewhere Indian goods are allowed. So that is where we are getting the chance to supply our goods and to fulfill that kind of shortage, that kind of demand, which was created by banning the Chinese goods.
Okay, that's helpful. And so which industries are kind of issuing large orders as of now?
So for example, if we talk about India, there are a lot of new sectors coming in. For example, power sector, there is a lot of capex going on with power sectors. There are a lot of capex going on in private industries which are associated with oil and gas industries and refining sector. They are also doing a lot of capex. Power sector which I am talking about is basically PSU sector, where for next 4 to 5 years there is a lot of new capex going on. Recently, our peers have also received orders from them, and still the procurement goes on for almost next 3 to 5 years. So there we are seeing a huge demand, where hot piercing mills are also allowed with the hot extrusion mills. So there is no kind of differentiation happening in the procurement of those kind of goods. So that is where we see that we can fulfill this demand. Even coming in with the new capex, other companies or other peers coming in with new capex won't be a challenge for Scoda.
Sure. That's helpful. So one more question from my end. Do we expect the new capacities to create an oversupply in the SS pipe market?
Sorry, can you repeat?
Do we expect the new capacities to create an oversupply in the SS pipe market?
No, sir. We do not see that kind of capacities coming in future.
Okay. So, thank you so much and all the best.
Thank you.
Thank you. We take the next question from the line of Pranay from J&J Holdings. Please go ahead.
Hi, sir. Good morning.
Good morning.
Thank you for the opportunity. I'm wishing you all the very best for your maiden thoughts and way forward. Sir, I have just a few questions. Basically, I wanted to understand for seamless as well as welded, our capacity for pipes and tubes are fungible, right?
Yes.
Okay. So how do we see the capacity ramp up over a period of next 2 years, as well as your targets for utilization also, broadly?
Sorry, little then.
How do we see the capacity ramp up going forward in the next 2 years?
Okay, yeah. So the new welded pipes and tubes capacity is expected to be operational by Q1 FY27. Seamless pipes and tubes capacity is expected to be operational in H2 FY26, where we are still trying to start the production of seamless by probably August or September. So where if we are able to do that, if we are successful in getting 2 more months, then it will help us ramp up in the capacity as well as in the revenue.
So this will not come phase-wise, like seamless from 10 to 20, it will happen in H2.
H2 FY26. I'm talking about seamless pipes and tubes capacity.
Yeah, seamless. Okay. And how do you see the ramp up in the H2 of this year?
You're talking about in terms of volumes?
Utilization, yeah.
So we can expect 20% growth in terms of volume.
Okay. Thank you, sir. Thank you.
Thank you. We take the next question from the line of Nayan Bodia from Xylem PMS. Please go ahead.
Yes, sir. Hi. So I wanted to ask about 2 things. First is about the finance cost. Are we looking forward for debt repayments?
No, not at present.
Okay. And about the other expense part, how much is it going to be as a percentage of sales going forward?
Just a minute.
Going forward, the expenses will remain same.
Okay. Thank you.
Thank you. We take the next question from the line of Jignesh from Jiva Capital. Please go ahead.
Yeah. Am I audible?
Yes.
Yeah. So listening to your commentary, I find it very optimistic However, if we see some other industry players, they were kind of pessimistic, saying that in FY25 they have seen a very low growth in volumes on the domestic front. So, do you see that improving in FY26 on the domestic front?
Sir, first of all, we really do not want to dwell much on the competitions and the peer side. But I would just like to comment on this, that whoever the peers are and whatever they are commenting, they have a little bit of different product mix. And they are talking about the overall demand of all their products. Where in Scoda currently what we see is only growth in seamless as well as welded pipes.
Okay. So, another question. Considering our new approvals in power and renewables and related to shipping, suppose that gets delayed, so we will be able to see 20% volume growth even if that new approvals get delayed by a quarter or two?
No, sir, we won't see any kind of decline in the volumes even if the approval process gets delayed. Because, as you know, basically those kind of approvals usually takes time.
Yes.
We are not really dependent on those approvals for our day-to-day and routine business. Right?
Right. Okay. Thank you.
Thank you.
Thank you. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star and 1. The next question comes from the line of Deep Shah, an investor. Please go ahead.
Hello. Good morning, and thanks for this opportunity. Firstly, sir, congratulations on your maiden public offer and stellar listing. So I wanted to ask that I guess we have around 1,000 tons capacity in the welded pipe space. Yet, what could be the possible reasons for lower volumes?
Sir, we have already discussed this, and I have explained in very detail earlier with another question. But I would just explain you in a brief. First of all, we don't have welded pipes capacity. The capacity which we have is for welded tubes. Basically, tubes and pipes are both different products. Manufacturing process is little bit different, and even the applications are little bit different. The decline in welded tubes you are seeing is because the market is shifting to seamless tubes instead of welded tubes. Because these tubes are used in very critical applications like production of heat exchangers, boilers, LPHP heaters and coolers, where temperature and pressure controls are the most important aspects. So, to get the reliable product, a durable product and life expectancy to be longer, the market is shifting from welded tubes to seamless tubes where the maintenance costs are lower and the life expectancy is more. That is why we are seeing the decline in the welded utilization since last 3 years. And the new product which we are bringing in by doing the capex from IPO process is specifically for welded pipes, which is again on the commercial side. Welded pipes have the same kind of demand which we are seeing in seamless pipes.
Okay. And so, what sort of customers are we targeting are we targeting in this space?
So we'll not be specifically talking about the customers, but I can outline the industry and sectors for you. For example, oil and gas sector, then comes the process industry, the renewable energy, the power sectors, the automotive sectors. This kind of sectors we target to explore more. Currently, we are already involved in this kind of sectors into business. We'll just be increasing our share there.
Okay. And so, in some previous questions, you had mentioned that you are targeting some capacity expansion by H2 and in the near future. So, what would be the optimum level, and when are we expecting to reach that levels? Optimum capacity utilization levels.
So, for both, for example, what I mentioned earlier, the seamless capacity we expect to start in H2 this current financial year, and welded Q1 next financial year. But to reach at the optimum level in terms of utilization, we are expecting to do it by between FY28 and 29.
Okay. Understood. That's helpful. So what would be the optimum utilization levels? Will it be around 70%-80% or something higher?
You can consider it between 80 to 85%, which will be blend of both seamless as well as welded goods.
Okay, sir. Those were my questions. That's helpful, and thank you, and all the best for your future.
Thank you.
Thanks.
Thank you. The next question comes from the line of K. Uday Kumar, an investor. Please go ahead.
Good morning, sir. Thanks for the opportunity. My first question is, what is the current order book level you are having? What is the cycle time for liquidation of order book, sir?
So current order book stands at 130 crores, out of which 80 crores is from exports and the rest is from domestic market.
But the cycle time for closing of this order book is how much period, sir? Maybe 3 to 6 months?
It's between 3 to 4 months.
3 to 4. So the new capacity which is coming for seamless production for FY26 H2, what is the capacity, sir, in terms of metric ton, the new line?
So the capacity which we are bringing in is 10,000 metric tons for seamless and 12,000 metric tons for welded.
You said welded will be come for operation in the next financial year. Am I correct, sir?
In next, yes, Q1 FY27.
Okay. Are you going for any Super 30432 stainless steel grade manufacturing, sir, for Inconel or Super 30432?
Not right now.
Okay, sir. Thank you, sir. Thank you.
Thank you.
Thank you. The next question comes from the line of Jay Ketan Shah from HDFC Securities. Please go ahead.
Hello. Am I all audible?
Yes.
Congratulations on the channel numbers. I just wanted to know about the volume growth for FY25 and FY26 expected. So, like your peers do quote the volume growth for seamless pipes and tubes. So, what should be expected for FY26 and FY25 as well?
So, we have already answered this. So I'll repeat again that we aim to grow at 2.5 to 3x the industry growth in terms of volume.
Okay, and like what would be the volume for FY25?
FY25 last year, 9 months we did around 8,000 tons, right? But in Q4, due to competitive reasons, we'll not be able to disclose those volumes.
Sure. Okay. But actually, your peer do quote the volume numbers. So I am just like.
It was for 9 months, sir. It was for 9 months in the RHP.
Yeah, 9 months we are aware of. Just wanted to know about Q4 as well, so that we can get the full year picture.
But sir, I already mentioned 2.5 to 3x the industry growth. I mean, we already have the slide regarding the industry growth in the presentation if you have gone through.
Okay, fair enough. Yeah. Thank you.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I will now hand the conference over to Mr. Sahil Sanghvi for his closing comments.
Yeah. Just want to thank all the participants for joining the call. Also want to thank the management of Scoda Tubes for patiently and elaborately answering all the questions. Samad sir, would you want to give any closing comments?
Yeah, sure. Thank you everyone for joining today's call. Please feel free to reach out to Capital Bridge Advisors in case of any queries. Have a great day.
Thank you. On behalf of Monarch Networth Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.